Hi everyone. Alphabet reported fiscal year 2022 fourth quarter results. I was really excited to do this video. Alphabet is one of my favorite companies, and you're probably watching this on one of Alphabet's properties, YouTube. So let's look at its recent quarter's results and let's figure out what were the critical numbers and what that could mean for investors. So overall revenue increased by just 1% for Alphabet in Q4 to 76 billion. This is much slower than the company is used to growing. It's grown by more than double-digit revenue growth rate over the last decade. For it to be falling to 1% in Q4 is a considerable slowdown. Earnings per share of $1.05 decreased from an earnings per share of $1.53 in the fourth quarter of 2021. So that was as revenue is falling. The company didn't cut costs fast enough to control the fall in earnings per share. Google's search revenue fell to 42.6 billion. That was down from 43.3 billion in the same quarter the prior year. YouTube ads fell to 7.96 billion from 8.6 billion in the prior year. So combined, what's been going on here is that marketers are less interested in spending money to gain the influence of your purchasing decisions because they fear that consumers are going to reduce spending as inflation has pinched your budgets and as the fear of recession has increased. So marketers have kind of stepped ahead of that trend and said, let's reduce spending just in case we enter a recession so that we have that extra money on hand to deal with slowing sales. And so that's hurt the revenues of ad-supported companies like Alphabet. And so overall, Google advertising revenue fell to 67.8 billion, down from 69.4 billion, a year-over-year decline in ad revenue. This is a significant development. As you know, Alphabet has been growing. It's the most dominant advertising business in the world, capturing nearly 1/3 of the overall $800 billion global advertising spending industry. So a considerable decline here for Google. The good news here, at least one bright spot, was Google Cloud increased revenue to 7.3 billion. This was up from 5.5 billion in the same quarter last year. Google Cloud is ramping up its scale in competition with the dominant cloud service provider, Amazon, and already that's starting to impact Amazon. If you watched my video on Amazon's most recent earnings, you will have noticed that Amazon's cloud revenue growth is slowing and its cloud profit margins are decreasing as now Amazon has to compete with Alphabet as well as Microsoft. So Amazon is ceding market share to companies like Alphabet. This is really good news for Alphabet, at least one bright spot. And longer term, also a bright spot because it kind of diversifies the business away from being so dominant on advertising. It at least gives it a little bit of alternative revenue sources instead of just relying so much on ad revenue to support the business. Here's a figure I was disappointed with. Total employees increased to 190,234. This was up from 156,600. And what I've been paying attention to more so lately with a lot of these tech companies is to control hiring, to slow hiring, to lay people off, to not rehire people that are switching jobs because your revenue growth is slowing substantially. You can't hire as much as you were before when you were growing revenue at double digits or more. You've got to really control your hiring. You got to maybe let some people switch jobs without replacing them. You got to maybe do some better layoffs. So, I mean, to Alphabet's defense, they did announce job cuts of 12,000 in January. So this will make a small dent in its overall labor force. And unfortunately, when I looked in the details of these layoffs, the severance packages were extremely generous, and it was almost as if they would have been better off just keeping these employees if you're going to pay them so handsomely of a a severance package, it's going to cost you perhaps just as much. If you're going to do that, you might as well just retain these employees and just stop hiring new employees, and also don't replace the ones that quit. That would do better to control your earnings per share, to control your expenses, than announcing layoffs of 12,000 and giving robust severance packages, right? So a little disappointing there. Finally, the company holds $113 billion in cash and equivalents and only $14.7 billion in long-term debt. So it's got a really robust balance sheet. I mean, you can argue that Alphabet could use this balance sheet to take advantage of this time when its rivals are needing to pull back, and it can invest in growth and really capitalize on that. But Alphabet's not even doing that. That's why these job cuts really baffled me. Just 12,000 and the generous severance that they gave these employees, it confused me as to why they chose to handle it in that manner. All right, so that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.